In today's video, I want to show my favorite trading strategy, which is very accurate and highly profitable. Before we start the strategy, I want to mention some important points, so please don't escape this part because it's really important to pay attention to these points. This is a high-risk trading strategy. It's actually a counter-trend strategy, which means we enter in the opposite direction of the current trend to catch a potential reversal movement. So in compared to a trend-following strategy where you enter in the direction of the current trend, this strategy has higher risk. So if you're not willing to take higher risk, this strategy is not suitable for you. This higher risk is manageable with a proper risk management strategy. So risk management is extremely important in this trading strategy. This is a swing trading strategy and we use 1 hour time frame in this trading strategy. You may remain in your position from a few hours up to few days. So if you don't want to have open positions overnight, this strategy is not suitable for you. To lower the risk as much as possible, the barriers for entering a position are increased in this trading strategy. So this is not a high frequency trading strategy, and for a single pair you may not have any trading opportunity even for several weeks. So patience and having your emotions in control is extremely important in this trading strategy. This strategy is suitable for Forex market and major pairs are recommended for this trading strategy. In more volatile markets like crypto, it's still viable, but your win rate decreases considerably because crypto market is more volatile and this higher volatility can give you false signals on entry or hitting your stop loss just before reaching to your expected target. Personally, I use this strategy only in Forex market. And another important point is that you must pay attention to economic calendar for important events and news releases because they can affect the market and so affecting your position. I recommend you not entering a position just before or near a news release, and if you are in an open position and an important news is going to be released, it's better not to take any risk and close your position. If you know fundamental analysis and you know how to analyze news and economic measures, so you can stay in your position if the news or event is going to be in favor of your position. And the last point is paying attention to the fact that if a trading strategy works for someone, it doesn't necessarily mean that it will work for you, because when it comes to trading, experience is the competitive edge and defines the success of a trader. Having the emotion in control and adapting to market condition is the skill that is developed only by experience. And please pay attention that I'm not a licensed financial advisor and this video is prepared for entertainment and informational purposes only, and the content of this video is just my personal experience from the chart at that time, and it's not intended to be relied upon as a trading or investing advice. So please make sure to do your own research or consult a certified financial or investment advisor. Alright, let's see how we trade based on this trading strategy. As I said, this is a swing trading strategy on 1 hour time frame. So first we set the time frame on 1 hour. This is the price chart of euro to US dollar, and as I said earlier, it's better to use this strategy in Forex market. And please pay attention that you must choose a broker that provides volume data, because in this strategy volume also plays a role. So here we click on indicators and we search volume. We add this one. This trading strategy is a mix of price action analysis and indicators. We have two indicators in this trading strategy. The first one that we want to add is RSI. This one, Relative Strength Index, and we need to adjust its settings. So here we go to the settings of the indicator. Here in the style tab, except RSI line, we remove rest of them because we don't need them. And for RSI line, let's increase the thickness so we can better see it on our charts. And the next indicator that we want to add is OBV. This one, on balance volume, and let's change its appearance here in the settings. Here in the style tab, we increase the thickness of the OBV line and let's change the color to yellow. All right, now we can better see it on our charts. And for volume, we also go to its settings. Here in the style tab, we add the moving average line of the volume and let's change the color to yellow. All right, everything is already set on the chart. And before we start the strategy, please give this video a like, and if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. All right, as I said, this is a counter trend strategy, which means we want to identify the reversal points of the market. For example, here the price is in a downtrend and then it turned to uptrend. We want to enter here and we want to know if there are any signals that the market is going to change direction. The first thing that we should look for is divergence. Because we are in a downtrend, we must have a lower low, but in RSI higher low and OBV also higher low. You may wonder why we chose these two indicators, not other indicators. First of all, RSI is one of the best indicators for discovering divergences, and it shows divergences in momentum. When we have a bullish divergence in RSI like this, it means that the downside momentum is weakening, and on the other hand, the upside momentum is gaining strength. The price is declining, but RSI is telling us that upside momentum is gaining strength, and probably we will have a reversal. And OBV, if you know this indicator, is one of the simplest and best volume indicators for tracking smart money when institutional and large traders are active and their money is flowing in the market. When we have a bullish divergence in OBV, it's showing that buying volume is building. The price is declining, but behind the scene, the buying volume is building, and this gives the probability that maybe we will have a complete reversal like this. So until now, we have two signals that probably we will have a reversal. One from a momentum-based divergence signal and the other from volume-based divergence signal. Please pay attention that in the ideal situation, we must have lower low and RSI higher low and OBV higher low. In case if they are not higher low and they are equal low, still can be acceptable, and you can show flexibility on this depending on the market condition. In case if for the price we have equal lows and it's like double bottom pattern for divergences in our indicators, it must be higher lows. Equal low for divergences in the situation while the price is also made equal low is not accepted. Alright, in the next step, you must identify the swing high between the two lows, and then you must draw a horizontal line on the highest high that you see here. This is our resistance level, and you must wait until it's broken. The breaking candle should be strong, which means it should be medium to long green candle, and the closing price of the candle should be near to high of the candle. And finally, for the volume, it should not be below the average volume. It should be equal to average volume, which is this case here, or higher than average volume. The higher the volume, the stronger is the breakout. If you want to lower your risk, you can wait for another strong candle with above the average volume. For example, here you can see that after breaking, we had retest of the broken level, and then the price turned back to the direction of the breakout. As you know, the pullback after the breakout is the safest entry because you can be sure that it wasn't a false breakout. So depending on the degree of the risk you're willing to take, you can have two trade entries here. The first entry is when this resistance level is broken with not below the average volume, and the second entry could be to wait for another strong candle with considerable above the average volume. So when this line is broken with the condition that I explained, the bullish reversal signal is confirmed and we can enter a long position here as this new candle is opened. The stop loss for this trade is placed below the lowest low of the pattern. In case if the lowest low is very far from our trade entry, you can set the stop loss below the low of the breaking candle, just a logical place below our resistance level. And for the profit target, the safest option would be to set your take profit order at the level that makes risk to reward ratio equals 1.5. Actually, because we are catching the reversal points of the market, many of the times the market experiences higher levels of price, and this is really depends on your experience how you can ride on the trend and get the most out of your position. Price action analysis is the most effective way, especially multiple time frame analysis, but as I said, managing this will need experience, and the safest option would be collecting your profit at 1.5 risk to reward ratio. And for short position opportunities, we do the same but in the opposite direction. Here we need to identify bearish divergences where the price made higher high but RSI and OBV made lower high. Then we identify the swing low between the highs and we draw a horizontal line here at the lowest low that formed on the chart. This is our support level and we wait for the breaking of this level, which happened here by this strong candle. In this case, the candle should be medium to to long red candle, and the closing price of the candle should be near to low of the candle. And finally, we check the volume. As I said, the volume of the breaking candle should not be below the average, which in this case you can see that it's considerably higher than average. The higher, the better and stronger the signal. So this bearish signal here is confirmed, and we can enter a short position here as this new candle was opened. The stop loss for the trade is placed above the high of the pattern, and as I explained, if it's very far from our trade entry, you can set it lower above the breaking candle somewhere in a logical place, and the profit at 1.5 risk to reward ratio. In this case, you can see that this level was the lowest price that market experienced after the reversal, and then we had bullish reversal. So as I said, riding on the trend and staying longer really needs experience, and the safest option would be collecting your profit at 1.5 risk to reward ratio. As I mentioned at the beginning of the video, risk management is extremely important in this trading strategy, and you need to manage your account properly. I recommend using 1% roll risk management strategy, where you only lose 1% of your trading account in case if the price goes against your position and hit your stop loss. Based on this strategy, your position size is calculated in a way that you will only lose 1% of your trading account. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a successful trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.